Welcome to the 6th episode of the Global Guessing Weekly podcast about everything geopolitics and forecasting. Today we are joined by Pavel Atanasov. Today, Pavel works at Pytho.io, a firm which he co-founded with fellow GGWP alum Regina Joseph in 2016 that has combined exciting new research and technology to improve decision-making across industries. Before launching Pytho.io, Pavel worked as a product lead at Poly Portfolio, an investment risk software company, as well as a postdoctoral fellowship at the GJP, which we all know very well, the Good Judgement Project. Two experiences which we'll be discussing in further depth later today. Pavel graduated from Franklin and Marshall College in Pennsylvania, something that we both love, given that we both actually went to college in Pennsylvania. And Haverford competes with Franklin and Marshall in athletics, so a bit of a rivalry there.
Sure.
And he received his Ph.D. from Penn in psychology and decision processes. An entrepreneur, scientist, and academic. Without further ado, welcome, Pavel.
Thank you. Great to be with you guys.
So I think we're going to jump off talking a bit about your background. We sort of dug into it a bit in the introduction. But like I said, you got your PhD at Penn, and you were also a postdoc at the Good Judgement Project. Can you speak a bit about your experience at Penn and what the risk and sort of forecasting culture is like there? We're familiar with the political risk lab that exists on campus, and obviously Phillip Tetlock is connected to the institution. What was that like?
Yeah, so the Penn PhD program is an incredible, very intellectually stimulating, very unusual program. So the psychology program is made out of people who do clinical psychology, who study like depression and anxiety, people who do neuroscience and animal behavior. There's actually very few of us who study judgment and decision making, which was my specialty. So the beginning was just like a very broad base of knowledge in psychology in all kinds of areas. And then I started adding on to it. A lot of the decision research was done actually at Wharton, which is right next to the psych department. Wharton is this big, grand building, and the psychology building is this like small 70s style building that looks sort of like a nuclear shelter. So I ended up spending quite a bit of time actually at Wharton, taking a lot of decision making and statistics courses there. And I was a teaching assistant in a negotiations class for the MBA program, and got to work with many folks who are doing work in between psychology and decision making, like Howard Kunruther, who was the founder and director of the Wharton Risk Center, and Jonathan Barron and Jason Dana, who are also advising me, who are working on different aspects of experimental economics, judgment, and decision making. So initially, I wasn't so much focused on forecasting and prediction as just like having a base in judgment and decision making, psychology, and statistics. And it was near the end when I was just writing my dissertation that Barb and Barb Mellers and Phil Tetlock came to Penn from Berkeley, and we got talking, and that's where my interest in forecasting developed, and it led to my postdoc at the Good Judgement Project.
Yeah, so could you talk to us a little bit about sort of what you did during your postdoctoral scholarship under Barb Mellers and Phillip Tetlock, and sort of what was it like having them as supervisors? I'm guessing you learned quite a lot from Barb Mellers about decision-making processes, and Tetlock with sort of judgment in terms of forecasting, because he's been in that space for quite a while. So
Right.
What did you learn about sort of forecasting and decision making, and sort of how is that sort of what you've learned, how has that sort of helped you later on in your forecasting career?
Yeah, I mean, it was the foundation of everything I do. So I've learned a lot over the years, but the first few years, my start in forecasting was just my work in the Good Judgement Project with Barb Mellers and Phil Tetlock. So what I did there was I started being focused a lot on the prediction market side. And then over time, I was focused on the comparison between different systems like prediction markets and polls, and also worked on training. So how to make individuals better at forecasting, identifying who is good at the job, who is good at prediction, and devising aggregation algorithms, which basically tell you, if you have a crowd with differing views, what are the most effective ways to combine their views. And part of that is, knowing who is good so you can give them a higher weight. So what I learned from Phil is the lessons that I've tried to extract is, he's just an incredibly broad thinker. He loves to come up with like a new big question that nobody has thought of before. And, once he is at it, once he starts tackling that question, he just finds all kinds of new aspects and new deeper levels to connect to it. And after a while, he becomes like the deeper thinker who knows the most on this question relative to, almost everyone else. And so my background is, I think of myself more as a methodologist. So like this big philosophical question or something that I've tried to make a second nature. But when I encounter such questions, I'm always thinking like, well, how would Phil think about those questions, right? And he knows a lot more than I do, so it's often he still has like an aspect that I haven't thought through, but it's a very useful exercise for me to think about it. And Barb Mellers is incredible at finding, a big important question and then coming up with a specific research design, like an experimental design that would answer it in a very rigorous way. And like, then think about like, so what's the contribution here to knowledge? What questions are we answering? How to best answer them, and, where to publish it, right? It's from the beginning idea to like the actual implementation, design implementation, and finding a good outlet to it. And so I find that methodical process to be very, very useful for me, and I try to implement it in every study that I'm involved in. But between the two of them, they're an incredible team, and I was very fortunate to have had them as postdoc advisors, and we continue to work together with them on research projects.
Yeah, and actually, we want to talk to you about some of those research projects here in a bit. But from your description of how sort of Phillip Tetlock operates, he kind of seems like the rare mix of fox and hedgehog, both the person that is able to sort of hop around from subject to subject and sort of peep their head in like a fox, but also a hedgehog who's able to sort of get really deep into a subject that he's able to deeply think. Is that a fair assessment, you would say, of I don't know what animal that would be. I don't know what happens when you cross a fox and a hedgehog.
Yeah, I don't know. Maybe you should ask him. He is the world's biggest expert on foxes and hedgehogs. But yeah, so often he would send me a tweet that he found that's related to our work, and initially I'll be like, "What's the connection?" And then I'll think about it, and I'm like, okay, that's a new perspective that I wouldn't have thought of, but now I can see why. We should be thinking about that way as well. So yeah, I tend to agree, but it's so much about just getting really into the question and staying with it for long enough and deep enough that you can come up with new solutions that people just haven't come up with because they haven't spent as much time and they haven't been as obsessive with that question.
So you sort of touched on this just now, but you mentioned, your interest in prediction markets and sort of focusing on decision making within that framework. Is that sort of what led you to your project after Good Judgement project, but before launching Pytho, being Polyportfolio, which, as we mentioned, sort of looked at risk and sort of a financial space in the investment space?
Sure.
Was there a connection there?
Yeah. So basically, the Good Judgement project was winding down. We knew that that was the end of the grant, and so I was looking for other opportunities, and Polyportfolio was a very unusual and cool opportunity in the sense that they basically had the machinery of a macro global hedge fund, but wanted to build a front end so that investors, not large investors, but any investors can access it and submit their views about macroeconomics. Like someone might say, oh, I think GDP growth in the US will be 1.8% and inflation will be at 2.5, right? And for investors who have views, it would devise an optimal portfolio and track it over time. And so I have a deep interest in prediction markets and in finance and trading. And so that was a great way to combine it with my work on forecasting. And the other interesting part that I was sort of expecting, but it was still a pleasant surprise, was that I got to learn so much about just software development in an agile way with software development studio that was far away, front-end design, or even things like writing investor newsletters and writing in a popular way to the public rather than in an academic fashion. And so that was huge for me. It was the best entrepreneur training I could have asked for while still getting a salary. So that was great. Now the main reason why it didn't work out as originally planned was that we weren't able to find enough investors who had views about macroeconomic topics, but wanted someone else to manage their investments, right? There were finance folks who had views, let's say, about inflation and GDP growth, but they were often doing it themselves. And there were on the other hand, were the passive folks who would just put their money in a Vanguard or Betterment, and even if they had views, weren't confident enough to express them in any way that they take an active position. And so perhaps with more time and more money, we could have found enough of a market, but it proved difficult at that point when we were doing it, in 2015, 2016.
Do you think that in that sense, Polyportfolio was a bit like ahead of its time? Because I feel like Clay and I recently read a book that talked about how, it's called Geopolitical Alpha by a guy named Marco Popic, and he works at a hedge fund. And his thesis is sort of that, having a macro perspective is going to become much more integral to investing decisions than it has in the past, where, markets have sort of only gone up and the US was sort of the global hegemon, and things are changing now. Do you think that, if Polyportfolio had launched, this year or maybe in a few years, that you would have had more luck finding those investors with perspectives?
Yeah, another thing that had happened as of 2015, 2016 is that there was just a big stock market rally. So, if you just put your money in the S&P 500, you would do well enough.
Right.
And relative to that, paying, 1% or even 0.5% to have an active manager who has similar or lesser returns just didn't appeal to many people, right? Now, active management can help you in some ways, like you can hedge some risk that you can't by just investing in the stock market. So it's useful to some types of investors above and beyond just like absolute return. But at that point, the zeitgeist was, go passive, reduce fees, or invest in the very few hedge funds that have outperformed the market recently.
Right.
And so it was perhaps an inopportune time for this idea. But as I said, it was incredibly interesting and a great entrepreneurial education, and it was just I was just there for a year, but I learned so much that I then got to apply at Pytho, so it was very useful in that way.
And sort of moving from 2015 and sort of moving into 2019, one of your more recent papers I thought was really interesting. It's called Small Steps to Accuracy. Could you sort of explain the question that you were aiming to answer in this paper, sort of the process you took to look at it, and sort of like what your top level takeaways were, and if you found a way to sort of operationalize those findings when it comes to making forecasts? Because it seems like you found what good forecasters do in throughout this research.
Yeah, so I was looking at it from the perspective of how do we find good forecasters so that we can subset them or we can weight them heavily in the aggregation stage. So I wasn't looking so much for like how do we teach people to be better, but more like how do we find the ones who are already good. And one set of issues that came out was just belief updating. We knew that people who update more frequently are better, mostly because they just pay more attention. But we wanted to see, is there something else to updating that can tell us, who is thinking about it in the right way? And so what turned out is that it's not just frequency, how often you update, but it's also the size, right? So like small updaters are, let's say you go from 20 to 23% to 18% to 17, then back up to 25. So some people just update incrementally and some people just like to jump around. And, if I see how you did on like 10 questions, just your pattern of belief updates, then I can predict how you do on the next 100. It's a very reliable, it's a sort of a signature that people have. And so the small frequent updaters tended to behave more like closer to like a Bayesian standard. So they were behaving more like Bayesians, and they were also just much more accurate. I mean, it was the size of updates, the average size was like the best single predictor of how accurate someone is, apart from like their historical accuracy. And so it's hard to say, hey, you should make small frequent updates, because it's easy to sort of fake it and do it in a way that doesn't actually make you a good forecaster. But we did extract some lessons, which is like, if you start with a good base rate, then you probably don't need to update as much after that. But you should always look for opportunities to revisit, right? There's some information that's not very important, right? Some of it is just the passage of time without nothing happening, but it's still informative. And one way I like to think about it is that the geopolitical questions in GJP were more like a basketball game, where like any one shot, especially at the beginning, doesn't really turn around the game. Maybe at the very end, but at the beginning, whether you make or not make one shot doesn't make a big change, but it's still informative. In soccer is different, right? Because when you score one goal, that's a huge update. But geopolitics, at least in the Good Judgement project type of questions, was more like basketball, where there's like many ups and downs, and if you trace it over time, you do better.
And sorry, did you find though that the really good like super forecasters, even if on average they didn't update and they took smaller incremental updates, on sort of like the tail end of their updates, were there instances where, at the most extreme, like they did do sort of occasionally some few sort of large updates when maybe they got the initial analysis incorrect?
Yeah, absolutely. Right. So we're looking at the average, like the mean size of the update, right? But within that mean is like the mean for super forecaster was like 10 percentage points. For regular forecaster was 20 percentage points. But even within that 10 percentage points, there were a lot of like 2%, 3%, 4% updates, and a few like of 90%, right? So it's all about the average, but most people find themselves on the wrong side of maybe and have to, pivot, right? But in super forecasters, it just happened less often. But one thing that's very exciting to me is that, like, I see this as sort of a more general pattern than just like probabilistic forecasting on geopolitics. There's a study that like I don't have time to do, but if someone wants to do it, that's great. I'm happy to talk to them. Like, imagine that you're an editor in Wikipedia and you have like 1,000 articles and you're just trying to see like which one of those articles needs the most attention, right? One way you can look at that is to say, well, let's look at the recent edit history. And if an article has had like one big update where they cut out a bunch of text and added a bunch of new text, that probably, it's great that someone made that update, but there's probably typos there. There's probably things that are not quite working out. versus an article where, you see that over the last month, there were like 20 very small updates. Like that tells you that people are looking into it, they're paying attention, but they don't find so many big things to change about it. And so that article is probably in better shape than the one with like the very big update, right? You can think about it like in a software development project, right? Like if you want to see like where there are likely to be bugs, like, yeah, if there was one huge update and then nobody touched it for a while, there's probably bugs in there, versus like if you know that a couple of people are like going in and out and making small corrections, that code is probably better. So I think there's a general sort of principle about what happens after you're making a bunch of small updates, that it probably gets you to a much more stable place where there's less room for immediate improvement.
And you could also probably, like with things like Wikipedia and say on GitHub, also, right, you don't have Briar scores, but you do have rankings within those own communities. And I'm
Right.
assuming any sort of advanced system would also sort of take that into consideration, right?
Right. And I don't know, perhaps they already do that, but I'll be very interesting to see like, someone just reads 1,000 articles and rates how good they are, and then looks at the pattern of recent updates. I bet you that there's a relationship where the ones with many but frequent small edits are just higher quality than the ones with like fewer number but like larger edits. So it's speculative, but I think it's definitely worth trying.
And so I just had one more question about that paper. I was wondering, can you speak a bit about what the research process is like within forecasting? So like when you're sort of first approaching sort of a very big product like this, like just how do you think about starting something like this? A lot of people who are watching might be interested in the research side of forecasting as well as sort of the more practitioner side of forecasting. Can you speak to that just a bit?
Yeah. So initially you start with a question within forecasting. Our question was, how do we find good forecasters before we know their accuracy scores? And then you come up with a bunch of hypotheses, right? Maybe they're the ones who update more frequent. Maybe they're the ones who write longer rationales. Maybe they're the ones who log in more often. Maybe they're the ones who say certain words, right? So that's where, NLP can play a role. And then you look through a bunch of hypotheses and you try to find like, is there like any evidence of any relationship? And you whittle it down because most relationships are just not there, or when you look at them across different subset of data, they just disappear, they're unstable. So you're left with a few stable relationships, and then you marry sort of the bottom up data driven perspective with the theory, right? Like, why should I expect that people who have a specific belief updating profile are better or worse, right? There's big literature in psychology on updating. Emma Tversky's early work was about how with Edwards was about how people are conservative Bayesians, so they update sort of in the right direction, but not enough. On the other hand, there's the idea that people are very noisy in their judgments, right? So if you're noisy, you might think that people jump around a lot. And so, it was a mixture between like the practical sort of bottom up, like just look for any statistical measure that can tell you who's a good forecaster, and the psychology of it, which is also very interesting. And this happened to be, both an interesting sort of empirical relationship, and it relates to like an interesting psychological question. And so that was one of those rare aha moments when we found that that pattern, that it felt great because it feels like so general. It's so easy to get the data. Anytime someone gives you a bunch of forecasts, you have their pattern of updating, and you can use it across many different sectors. It doesn't have to be geopolitics. It could be anything, really. Mm-hmm.
Now, we sort of want to move to a different subject and sort of talk about getting wisdom out of the crowds and prediction markets, but both of you guys will have to give me 1 second. You can't hear it because I have noise canceling on, but my dog is barking. I'm going to go let him out real quick, and then we will come right back. So
Okay, sounds great.
we'll come right back here in a sec. All right. Sorry about that delay, guys. Hector had to be walked for a little bit, but it didn't take too long.
Right.
What'd you guys do on while I was away?
We were just talking about scoring rules, the basic stuff.
Well,
the usual.
Well, that's actually great because we want to talk about getting the wisdom out of the crowd and talking about some prediction markets.
Sure.
In actually the first podcast episode of the Global Guessing Weekly podcast, we had a super forecaster on, Balkan Devlin, and he mentioned his uncertainty about monetary incentives producing better forecasts. And in a 2019 paper that you were an author on called "Are Markets More Accurate Than Polls?" you found results that both confirmed Balkan's intuition and also contradicted it. It should be noted that in your study you were using paper money, but you found results that sort of were both for and against Balkan's intuition. Could you briefly explain this paper and the study as well as its findings?
Yeah, so we use data from the Good Judgement project where we run a prediction market, continuous double auction market. So the one that, predicted runs that way, as opposed to, for example, Metaculus. So in a continuous double auction market, there's basically bids and asks. So people are trying to match up their orders, and the moment there's a match, there's a market price. There's no automated market maker or anything. The new thing that we did there is that as people were submitting orders, we also asked them for their probability. So you might say, oh, I want to buy this stock for an event at 60 cents to the dollar. That implies that I think the probability of that event is more than 60%. So then we would ask you, okay, so how likely do you think this event is? And the person would have to tell us, oh, I think it's 50% likely or 70% likely, right? And so that allowed us to match first what people were thinking. And usually they were consistent, right? So if someone was to buy at 60 cents, then they gave us a probability that was higher than 60%, and vice versa. And then it also allowed us to aggregate those probability judgments and compare their accuracy versus the prices that were produced by the market. And what we found was that they were on average similar in accuracy, but the market prices were less accurate when there was several months until the question was about to resolve. So if you had to wait, if you have to make a bid and then ask for 3 months before the question resolves, the bids and asks you make, the market orders you make will result in less accurate prices than just taking an average of the probability values that you gave us.
And then you found that in sort of the second half of the question duration that prices actually then ended up beating the beliefs. It's actually a pretty interesting. So at the first half of the question, prices seem to be pretty far out. In the second half of the question, there's improvements on the Breyer score, therefore the accuracy of the forecasts across the entire systems, prices and beliefs and just beliefs. But the biggest decrease came in the prices category. Do you have a hypothesis in terms of why that was the case?
Yeah, in markets, most of the activity happens right before you expect to get a payoff. So, the biggest levels of activity are on election date, for example, right? Because people want to trade in, get the question resolved, right? The election goes one way or the other, and then they get their money back. And market traders in general, they're a little bit impatient. So not only do they not want to hold their money, but also they just want to know what's going on, and they want their money out sooner, even if it's just play money. And so that usually happens even in the market with play money, is that there's a lot more activity right before the question resolves. And that's the case for, if people don't show up to give us orders, they also don't give us probability values, but the market does well when there's high liquidity, right? When there's a lot of activity, and polling is a little bit more robust to low levels of activity. So you can get a pretty accurate poll of 3 or 5 people, but for an accurate market price, you need somewhat higher levels of activity. But in those last few days, the prediction markets, before the questions resolved, the prediction markets did quite well. On average, they were a little bit more accurate than the beliefs that those same people were giving us in real time.
And did you notice when people were doing with prices that they were both purchasing based on their probabilities and then also purchasing based on, say, the difference of their probabilities to the price, and so taking advantage of sort of pricing arbitrage opportunities that individual forecasters might have? In our new podcast, The Right Side of Maybe, we had a forecaster on who did that same sort of move when it came towards betting on the Suez Canal when that would be cleared on Polymarket. And did you see that at all in your study with the paper money?
Yeah, so we found that people are directionally consistent. So most of the time, like 85% of the time, they were directionally consistent, right? So if you say, I want to buy at 60 cents, you would have a belief that's above 60%. And if you say, I want to sell at 60 cents, you'd have a belief that's below 60%. However, if you just go beyond directionality, people were a little bit inconsistent in the sense that you'd expect them to make the largest orders when they're very confident that the price is wrong, right? Like if you can buy some shares at 60 cents, but you think the event is 99% likely, you should buy as many shares as possible because you think it's almost a sure thing that you'd win, versus someone who thinks that the market is just underpriced by a few cents. And so there wasn't as much sensitivity to edge, what we call the expected edge that people thought they had. They made slightly bigger orders when they thought they have a big edge than a small edge, but it wasn't nearly enough to be consistent with like expected utility or Kelly betting or anything like that. And that's a separate paper we're still working on, which we call edge insensitivity. Basically, the idea that when people come up with two opportunities, one with a low edge and one with a high edge, they invest almost the same amount in both. It's almost independent of how much they think they're going to win.
Is that true across all class of forecasters? Did you notice that more accurate? Really? So even like super forecasters, I don't know if they're in your follow-up paper, but they also are missing out on opportunities?
Yeah, they're less edge insensitive than others, but directionally it's the same result.
And do you have an hypothesis for why that's I mean, I'm guessing that will maybe be in your paper, but anything you can share right now?
Yeah, at this point, it's a little bit more speculative why that's happening. We're wrapping our head around exactly that question. That's why this is taking so long. We know the effect is there, but we would not speculate at this point on the mechanisms.
Moving on to something that's a bit closer home for global guessing, we talked about some of the issues and dynamics of prediction markets. Can you speak a bit about some of the problems that come along with Metaculus type questions, and specifically sort of looking at questions like in the aggregate? Clay talked about our recent Right Side of Maybe episode. We also talked about there some of the ways that you can leverage the mechanics of the Metaculus platform to basically always end up in the black when it comes to points, and just speak about how that incentive structure sort of affects accuracy of forecasts.
And particularly of sort of like aggregating those forecasts as well.
Yeah, so in your, I believe it was number 4, podcast number 4, you discussed that topic, and So basically, the idea is that if you have the median, which you do in Metaculus, and you make a forecast very close to it, you're almost guaranteed to earn positive points, right? And so that creates a disincentive for the person to do hard work and research because they know they can get some points either way. And also it makes the consensus overly confident about that median because there's a bunch of people who are just trying to make, a few points from it. So the first issue with that is, well, is that something that a few people have noticed, but they don't do so often, or is it a big issue that's practiced by a lot of people, and B, in some ways it hurts the reputation of Metaculus as like a place where people get properly scored and everything like that, right? So the first thing I would do is just try to look at the data and estimate the size of the problem. And then if it is a bigger problem, then something that you could do is a very draconian solution would just be to stop showing the distribution of the crowd before someone has given you an initial estimate. That would make questions much less popular because people do want to know what the crowd is saying. But another issue you can do another measure you can take for the final scores is to say, we show you a distribution of all the forecasters so far, right? It's some kind of unweighted average, right? Or the median of everyone in the crowd. But for the final scores, we actually score you against the distribution of, let's say, the best forecasters, and we don't show you that distribution. So you wouldn't know what that median is because you wouldn't know who those forecasters are that go into the median. And in that way, any one forecaster who just joins wouldn't know exactly what they would be scored against, so they wouldn't have an easy way to just pick up a few points.
And then
the other,
oh no, I was just gonna, yeah. So that's sort of looking at the scoring side. I was looking sort of at both in terms of like the forecaster, in terms of how you then present that median to them, because there is cases, right? Like, say, a lot of people legitimately are reaching the same number, but from different perspectives. You know, that's useful for me as a forecaster, where if three people with, probably didn't use the exact same evidence reach 60%, the real number might actually really be 63%.
Sure.
And if you're trying to aggregate the entire community forecast to create an aggregated forecast, that way, you might want to sort of build that factor in. But then if you have this idea of people spamming the median, that might throw that off. Do you know of ways to sort of, counteract that? Effect?
At the aggregation stage, there are many things that you could do. One is to just downweight forecasters who always just, as you call it, spam the median, right? They wouldn't be the top scorers anyway, because you can't get to the top of the leaderboard just by getting a few points here and there. But you can be more aggressive at upweighting people who are different from consensus and better on average from it, and downweighting people who just were just very close to the median all the time, right? So that's one thing that you could do. The other thing that Jack So and others have written about is the idea of pivoting, which is the idea that if people have some kind of joint information, you can push them away from that joint information. So the easiest way to explain it is, let's say I'm a forecaster, I'm just joining a question and the median is 40%. and I say, okay, well, I would say something a little bit higher than the median. Let's say the probability is 45%. So at the aggregation stage, what you can do is to say, okay, well, this person probably thought the event is highly likely, but they looked at the median and they moved towards the median, right? So they moved maybe from 50% to 45 after seeing the median. So instead of taking their forecast at face value, I'm going to push it back to where we think their independent judgment would have been if they hadn't seen the median. So in a way, you're pushing people away from the median by some factor which you can work out in a backcasting setup, and in that way, you'd be looking at folks being you would, as opposed to taking people's beliefs at face value, you try to say, what if these people were looking at the question independently? What would they have done? And when you do that, the median moves around a little bit, and you get a different aggregation. It's a little bit more complex. There's more parameters that you can mess up potentially, but it is a way to deal with that issue of joint information from the crowd.
And then thinking about, so we talked about the input and in terms of the Metaculus aggregate, I'm thinking about what is the best way to deal with this issue for the individual forecaster who is viewing and trying to leverage that community forecast?
Yeah, I mean, again, I think the way to do it is to say, here's the average of everyone in the crowd, the distribution of everyone in the crowd. We're going to give you an initial estimate for your score that's based on that full distribution, but your final score would be based on a distribution that you can't see. So you don't know what that median would be. You can't, and you won't be able to just make a few points from guessing where it will be. Just by making you guess where the median of the best forecasters will be, we're basically asking you to guess what the true probability is, right? Because your belief should be that those best forecasters would have done their homework, and the best way you can match them is to do your homework as well. So that's the theory, at least, and that's something that we call proxy scoring rules, which is that you're scored not against the ground truth, but against some kind of a proxy measure of what the best beliefs is, what's the most accurate probabilistic belief is at this time. And in order to do that, you have to not have that knowledge of what that best belief is. And that's the idea of sort of the hidden distribution of best forecasters.
So just moving on a bit, you're currently working on a paper right now with some researchers from the USC Information Sciences Institute that's looking at the role that NLP, natural language processing, might play in helping people forecast better. Specifically, there's an area of NLP called sentiment analysis, which I know is used a lot by businesses to try and understand how customers are liking their product or not liking their product. Are there ways that you see NLP, but even more specifically that sentiment analysis, being leveraged in communities like Metaculus or the Good Judgement Open to sort of curate information and sort of give those signals where they might not exist otherwise?
Yeah, it's a very active area of research. So what we did in this paper is we were looking at natural language processing from forecasters' rationales, basically to try to gauge how we should weight those forecasts, right? If someone writes specific words or specific phrases, then for example, when they use numbers and terms that refer to time, they tend to be slightly better forecasters. So if you adjust the weights, you get a better aggregate, right? So the point here was purely aggregation. You could, however, use it in more of an elicitation setup where you use it to improve the experience of forecasters on the platform. And one way you can do that is to highlight rationales or comments that an NLP analysis deems to be likely to be highly useful, right, to others. And you can do that in a way through crowd feedback, like people upvoting each other's rationales. That's one way to do it. And the NLP analysis gives you a different way of getting at that, which is the idea that some rationales are better than others. Some people are better at writing rationales than others, and so you can upweight or highlight those contributions so that more people are seeing them. That's probably the next step of how I would apply it in an elicitation setup in a crowdsourcing platform.
And I know you don't want to talk too much about this paper because it's both still being written and there's a series of sort of main authors on it.
Right.
And, feel free to talk about them and working with them. I was just wondering if you could just sort of broadly talk about the approach that you guys are using to leverage natural language processing to elicit better aggregation. I went through the paper and I believe you guys are leveraging word sense disambiguation. If you could just sort of, not to steal anyone's thunder, but just provide a little bit of a summary and context for our listeners.
Yeah. So first to say, Yuzhuang Huang is the lead author of that paper, and he's doing most of the work. And whenever someone who is a graduate student or a postdoc does most of the work, I think it's important that they get most of the credit. So like I just want to say that. So again, what we do with the natural language processing is just trying to figure out, if someone gave a rationale, or if someone made their forecast at a specific time, or the forecast is associated with any number of features, is that forecast likely to be accurate, more or less accurate, basically. And the system that Huang developed is basically looking at all the different types of features. I believe there's maybe several hundred features about each forecast, including qualities of the rationales that are attached to the forecast, and trying to gauge that, what weight to place. And so I see this as very promising when you have a lot of data, right? So when you have potentially tens or hundreds of thousands of forecasts over many hundreds of questions, at that point, a method like this starts to become really, really useful. When you just launch a tournament, it's really hard to train that algorithm when you have just a few hundred data points. But once you've run it for several months or several years, that's where I believe like NLP and just more sophisticated machine learning methods like this one are really in their prime and can really give you a boost of accuracy.
So sort of building on that answer, and the work that you've done a lot of work, whether it's with Pytho, sort of studying humans versus machines in forecasts. And as we talked about in the last episode, humans are way better at machine models, at forecasting things where you have pretty robust base rates, such as clinical trials for COVID treatments. But I was wondering, sort of, are there advantages of machine models? What are those key advantages that machine models have over human forecasters, and how can we leverage those machine benefits when trying to get better human forecasts?
Yeah, so the main advantage of machine models is that they're scalable. People call it scalable. I'd like to define it a little bit further as to call them vertically upscalable. So that means If you have a machine model and you've trained it on like 10,000 data points, you can throw another million data points at that question, and it will keep giving you forecasts. And if anything, it'll be better, right? So that's what we mean by vertical. Is like if you give it more questions of the same type, it can keep giving you accurate forecasts, and if anything, it gets better and better. But it's not so much downscalable. Like if you had fewer data points, the model would get worse. And if it's not, and it's also not horizontally scalable. That is, if you keep asking it questions that are of slightly different type than the ones that you were asking, you would also have to either redefine the model, which takes time, or it would be giving you irrelevant answers. So if you have many data points and many questions of the same type, great, use a model. It's a great sort of first filter to get from like millions or thousands of data points to a few questions where you really need accurate answers. And then, you give those dozens or hundreds of questions to humans to give you that extra bit of accuracy. If your question definition keeps changing, then you're better off just asking human forecasters to begin with, because you would spend too much time just redeveloping your model for the different types of questions and probably won't get it to work really well.
Great. Pavel, now this is the time that you have almost certainly been waiting for, because in last week's episode you got a special version of the rapid fire round because we didn't want to spoil it for this week. So this time you are going to get the standard 2 forecasts that all of our other guests have to answer. Are you ready?
I'm ready.
All right. The first one, we are interested in what is the likelihood that Putin or Russia annexes more territory in Eastern Europe in the next 5 years.
Wow. Okay. I would put it at 15%. So it won't be a shock if it happens, right? The recent base rate is, something like that has happened in the last 10 years. Putin is going to be in power for the foreseeable future, and has nationalistic tendencies, and there are territories that are on which there are many ethnic Russians, so they can claim that that's a rightful thing to do. So I would put it at 15% over the next 5 years.
Okay. And the second question is, what is the likelihood that we credibly detect alien life in the next 10 years, and alien life being defined as cellular life protoorganisms?
And so the question is, we first detect something that we haven't yet detected, right?
Yes, unlike last week's question where we went a little more conspiratorial.
Right. I would say I would put it at 1%.
1%. I think you are owning the lowest point on that forecast. Why 1%?
Well, first of all, I heard Regina Joseph, my business and research partner, was a little bit higher than me. So as a Bayesian, I update when I hear super forecaster judgments a little bit higher. I would say this hasn't happened, or at least we don't know that it has happened. So the base rates are very low, but our technologies are getting better, and it is something that could happen. Now, I don't think it's at all likely that we find sentient beings in that time frame, but cellular life, I would go with 1%, rounding up to 1% at least.
All right. Well, Pavel, this has been great. Thank you so much for joining us this week and for joining us last week.
It's been a pleasure.
Where can people find you? What can they look forward to next from Pavel?
Yeah, so I'm at Pavel Atanasov on Twitter. So find me there and follow me. And you can also go to our company webpage, which is pytho.io. We'll be posting information about our upcoming tournament, the Human Forest Tournament, which will be starting in September of this year, September 2021. So this is the next big research project, and we're very much looking for participants of all stripes. So thank you once again for having me, and it was truly a pleasure to talk to you guys.